Mira Business FM, the sound of success.
Mira Business FM, the morning drive. A fresh wave of US trade protectionism is now in effect. We have new tariffs starting at 10%. They've kicked in, and the administration of the US President Donald Trump is signaling plans to push that figure, if they can, up to 15%. And the move comes just days after a ruling by the Supreme Court in the US that forced a reset of the previous tariff framework, prompting swift executive action. Joining us this morning, Kapil Sharma is Senior Vice President of Sales at Continental International Group. Hopefully we can break down what it means for Gulf businesses and investors. Kapil, it's good to have you on. Thanks for joining us.
Thank you so very much to have me on the boat.
Well, look, let's just jump straight in here. What immediate ripple effects are being felt in global trade flows now that this 10% tariff's taken effect?
The first and the foremost is the uncertainty and the recalibration, basically, which importers and exporters actually everyone is facing, and it's been so dynamic. Actually, Mr. Trump has offered to actually make it from 10 to 15% now. So yeah, importers, exporters, I mean, everyone has been, negotiating, renegotiating the pricing, the shipping limit, adjusting the shipping timings, and some of the companies, and the countries are actually delaying the commitments, basically, because whether it's going to be above 15% or it's going to stay at 10%. So yes, there's a lot of ifs and buts, basically. And if it rises to 15%, then countries, specifically, like Japan and all, I mean, they're in a bit of a fix, actually, because they had renegotiated their terms, which are far more, better than the 15% ones. So they've been after US to actually keep it at the same old terms only. So the supply chains are going to be stress tested. It's going to be a bit of a volatile environment, actually, for some time, because nobody exactly know what's going to happen soon.
Well, this is the thing, isn't it? It is that uncertainty factor. How exposed are UAE-based exporters and re-export businesses if this hike does go from 10 to 15%?
It just varies actually from sector to sector. Energy, oil, I mean, they are not going to be that affected. But there are some of those, the manufactured ones, the electronics ones, the automated ones, I mean, the automotive industry, basically. And some of those industries, actually, which does the remanufacturing over here and actually then being exported to US, those are going to be affected because the margins are going to be squeezed in those cases. So yes, that's going to be challenging actually for some of those sectors. But oil and energy, actually, they remain safe as of now. But if because of any inflation, actually the US growth slows down, then of course oil also can come, for bit of a pressure.
Do you think Dubai and other, trade hubs in the Gulf see an increase in transshipment or restructuring of supply chains as companies try and manage this exposure to tariffs?
Yeah, the trade hub. I mean, Dubai has been in a proper trade hub actually for quite some time, and it's been so structurally positioned actually from any kind of a supply chain disturbance. Actually, this is going to be benefited. Companies, they might actually reroute, their goods, actually consolidate actually their shipments and add a bit of a value added, activities over there, or they can just restructure, sourcing to just readjust actually their tariff exposure. And free zones over here, actually, they provide actually good flexibility in terms of, being an efficient trade hub. There's a bit of a regional distribution strategies actually, which have been supported actually with these, free zones over here. So yeah, we are well positioned actually to take care of any of those disturbances.
Which sectors in the GCC are most vulnerable to new import duties from the United States?
I would say consumer goods, electronics, manufacturing ones. and the ones actually which are dependent on the US demands, those are going to be exposed the most, basically. Construction linked exports, I mean, those could come under pressure.
Do you think we're likely to see cost inflation passed on to consumers in this region as perhaps a secondary effect, Kapil?
Very much, very much. Actually, once again, it depends on which sectors we are talking about, which fields we are talking about, and the ones which are dependent on the US trade routes. Yes, we might actually see a little bit of an inflation actually passed on to the consumers over here as well.
How should companies with US facing revenue streams rethink pricing and also the structures of contracts in an environment like this?
I mean, first of all, actually, the businesses, they should have actually the clauses, which should incorporate the tariff adjustments, because the situation is so volatile. Nobody knows exactly, what Mr. Trump is going to do the very next day. So the clauses actually definitely should have the flexibilities, in terms of the duties change or so. All those static long-term clauses, which people used to have the contracts with the protective clauses, which were exposing their firms, they are no longer going to be dynamic. Actually, in these cases, people need to have, people need to. I mean, the companies basically, need to actually evaluate their supply chain restructuring, how the optimization can be done in terms of the sourcing of these goods. Those kind of clauses need to be put in actually into the contracts, just to make sure that, yes, the businesses are actually safeguarded, their interests are safeguarded.
Does this shift accelerate a push from the GCC to diversify trade partnerships towards, even more towards Asia and Africa?
Yeah, I was just reading about it actually the other day. Till date, actually, UAE already has got like the 28 CEPAs, which is like the Comprehensive Economic Partnership Agreement. And they have just added like about 6 or 7, I think 6 or 7 actually new this year. Malaysia, New Zealand, Kenya, Central Africa. I think there was one more, Kenya. Yeah. So they are already, the country already has got their strategic alliances with the new countries, specifically actually Asia and Africa. And because this US tariff volatility, that definitely reinforces the importance of actually multi-directional trade routes, dependency on any one export destination. So yes, these all factors have actually compelled the local governments over here actually to have multi countries agreements, and they've been pretty good about it actually. Whether you may say they have forecasted it, or whether they want to really actually expand their the trade base, but yes, they have been pretty proactive about this.
We are a region, a country of free zones. What role do free zones and bilateral trade agreements as well? What role do they play in softening the tariff blow, if you like?
I mean, the free zones actually, first of all, I mean, they are providing flexibility to consumers and the efficiency of the warehousing over here, and they have got the operational advantages actually, which are helping companies from their duty exposure. So yes, and plus on top of it, actually, their bilateral trade agreements actually open alternative demand channels, reducing tariff sensitive markets as well. So we are not actually restricted to one country's tariffs alone. These free zones have definitely, I mean, with more CEPAs, with the free zone, efficient free zones over here, they definitely create structural, buffers over here. I mean, which are helping exporters in navigating actually, the global trade routes actually more efficiently.
From a currency perspective, a financing perspective, Kapil, how should regional chief financial officers, CFOs, be hedging against any further policy swings? I'm referencing the uncertainty again.
It has to be pretty dynamic, actually, and ever-changing, sort of a scenario. They need to have a scenario-based risk management approach. Currency exposure linking to the shifting trade flows should be hedged, nicely. Flexible trade finance structures, diversifying, funding sources, contractual cost sharing agreements, the mechanisms. These are really important. And the policy volatility, of course, demands integrated financial planning, which is accounting for the tariff changes. The FX shifts and the potential demand fluctuations, tariff changes. All the policy should be actually, taking into account actually all this. It has to be dynamic policy. It cannot be a one-way approach.
Yeah, dynamic is the word that applies here, isn't it? Let's take the scenario that tariffs do rise to 15%. Does that materially change the strategic calculus for Gulf exporters, or is it already priced into business decisions?
To be honest, actually, it's going to intensify pressure actually over here. And but then many of the businesses have already kind of factored these numbers in their planning. In case actually it gets escalated actually to 15%. Incremental increase, it could compress the margins, further, specifically actually the competitive or the price sensitive sort of sectors. But most of the businesses have already factored in actually, these numbers into their supply chains or the contracts, which they made the contracts actually which can absorb this cost as well. So most of the businesses are actually, pretty fine with the numbers actually which have been suggested by Mr. Trump.
Final point I wanted to make with you, Kapil, is tariff effects might mean higher export costs, supply chain disruptions, oil and global demand volatility, overall uncertainty. We know that's clear. So while there are going to be new opportunities for diversification and for market entry, what's really clear is that it's still time for agility to diversify trade relationships, because I'm suggesting, and I'm pretty sure you're going to agree, this kind of more protectionist global environment, it's going to be around for a while yet, isn't it?
Absolutely. And the next 3 years, we are going to live actually in such environment, basically, because as I said, actually it's a pretty dynamic. At one point of a time last year, we were told it's going to be on some countries like India also 50%, and all of a sudden, the numbers have been reduced to like 18 in case of India, actually. So no, to be honest, actually, even that 18 has not been, finalized. No paperwork has been done. It's just in the news, basically. So nobody exactly know what's going to come next. In such scenario, it's just that the businesses or the countries, they need to be prepared for ever changing sort of circumstances. In addition to that, of course, yes, as you rightly said, more trading partners, more agreements actually with the within these sectors, within the blocks. It's just going to be helpful. And I was just reading it actually the other day. EU, for example, they are in a bit of a fix because they once again actually negotiated their terms at 15%. If it's going to be 10, then they really don't know, how to move forward actually in such case.
Yeah, it's an impossible situation to predict. It really is. Absolutely. And you hear this phrase bandied around a lot at the moment, a new world order. But, simply put, it is a new world order.
It is definitely a new world order. Actually, it's just one guy actually, dictating terms and asking the other countries actually to follow it. It's just very unheard kind of a scenarios.
It's going to be interesting times, that's for sure. Kapil
No,
Sharma.
it's definitely going to be actually a more policy driven trade recalibration actually rather than the outright disruption. Yeah.
It will be for sure. Kapil Sharma is Senior VP of Sales at Continental International Group. Kapil, I appreciate you coming on, appreciate your perspective. Thank you for joining us.
Thank you very much. Really appreciate that.
It's
Thanks
Mira.
for having me.
Good to have you on. It's Mira Business FM. It's the morning drive. Just a reminder once again that we have a number of new podcasts that have launched. I mentioned earlier on this morning that the first of them I mentioned was Crossroads. Then I was mentioning Luxury Breaks. There's also The Fine Print, which is Tuesdays. You'll find it on podcast platforms and on the radio here. Raymond Kiswani is our resident legal expert, partner at Davidson & Co. And we're trying to demystify the legal landscape of the UAE from navigating complex employment matters. We're talking about that this week, and commercial disputes, to staying ahead of the latest regulatory updates. So look out for that on your favorite podcast platform. It's Mira Business FM.